Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Hello, Jeremy. Happy Friday.
Yeah, happy Black Friday.
Oh no,
I know, it's terrible, isn't it? What a terrible import that is.
it is. What a load of rubbish. That and Halloween.
Oh no! I'm not having that. Halloween's brilliant. Anyway, that's for another day. Hello, everybody, and welcome to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with London market, technology, change, innovation. And this week, we're going to center around data and projects and automation. And we've got a guest, Saki Thethy from Ascot, and we'll bring him in shortly. But as always, let's start with the news, Ben. So I think we want to talk about MGAs, don't we? First up.
MGAs. What is an MGA? That's the first question. How do you define these things? It's such a general term, but so this is a little thing that we might carry on with talking about, because there is a bit of a shift to MGAs, and there's quite a lot of discussion. Sometimes they get it in the neck, sometimes they're seen as the savior of the industry or whatever. And there's all sorts of MGAs doing kind of vanilla stuff, specialized stuff, and even insurtech stuff that we're talking about here. So this is another good Insurance Insider. I think it's an Insurance Insider in Full article that came out this week, which prompted. I'm not really going to focus on the bit about valuation, the art and science of valuation, because that's what their point of this article was, which was interesting. And it was really saying that ultimately it's a complex thing to decide whether these insurtechs, which are now struggling, of course, for funding, how do you value them? And I think largely the conclusions were that you have to look at the uniqueness of the proposition, whether it's scalable in future, and whether perhaps it even gets certain businesses more quickly into certain business lines. So those are the kind of key takeaways on that side of it. Within the article, there are some really kind of interesting points about MGAs more generally, which I wanted to bring out. And the first is, the scale of growth. I think they've kind of doubled in size over, I think, about 6 or 7 years, but don't worry too much about the stats on that. But they have grown pretty rapidly. So MGAs are a vehicle that is becoming more important. And according to the article here, they're saying that they now account for about 10% of the US market's premium income. So pretty big, really. And I think that's about that's pretty big. 80 to 90 billion of premium, apparently, that's what that is. So the other thing is that often, the kind of view of the way in which the cycle affects MGAs is that they should sort of drop back or decline when the market hardens, because capacity gets brought back in by insurers. But that hasn't happened in the latest kind of hardening cycle. They've kind of kept on going. So something else is probably happening. And I'm bringing this up because I'm talking to others as well quite a lot about MGAs and whether the structure of the market is moving. So there's an interesting question about how do these more agile, nimble, perhaps, businesses sit at the front end of capacity providers, insurers, who are somewhat slow. And we know there are service issues and structural issues, and we're going to talk about this about technology and so on. So that these organizations create a sort of offer that is more flexible and is here to stay. It's quite a big it's a debate. I think the issue is that it doesn't get necessarily debated in one go in one sort of argument, because I think there are so many different types of MGAs, and I think the defining of what these are, can be anything from some massive kind of program manager in the US, to wholesale broker program manager doing E&S business, through to some quite very tiny operation looking at claims or whatever. So it's very kind of broad field. So that's perhaps why the argument is quite tricky, because you're not talking about one about similar things or like for like. But it is definitely a growing trend, and I think it's something that I've discussed with brokers and insurers, in relation to service, which is, well, if insurers are struggling to deliver service or quick service or responsive service, either that's a technology solution to some extent these days because it's hard to get the staff, I suppose, or you move to an operation that says, well, we stand for service and that's what we get paid for, and that's a somewhat different proposition. So yeah, I think it's an interesting article. I think I think it is about the change, and it does rather underline the growth as well that's going on, regardless of cycle or even funding. In fact, in terms of the insurtech ones.
Yeah, it's an interesting point to where they're adding value. I think the only thing I would say about it is, the use of the word insurtech, which we on LinkedIn I think it was Max Pell that actually said, we've got to define what insurtechs are, and we always bang on about it, don't we, Ben? Even in this article, they've got two different spellings of it: insurtech with a small t and one with a large t. It's like, so no one actually knows what the hell they're talking about. And for me, insurtechs are technology companies that help insurers, brokers, MGAs, whatever it is, to run their business and operating model. And I think this how to buy an insurtech MGA, I mean, it's just a nonsense to me. But I take your point that they are adding value. We're not seeing this kind of in this hardened market them rolling back from it. But I think we just got to get the language right around this stuff, because it's just, MGA in itself, like you said at the top, was just confusing. So
I think this is also a really dangerous area for the industry, this whole language issue, and it's something we'll come back to. But things like Greensill, which has been an issue, Vestu, these are all organisations that in some ways you're quite difficult to understand. So when the article comes out about the problem or the fraud or whatever it is, you have to, even the FT and whoever is writing these articles then has to explain what these organisations are. So you've got it feels sometimes like it's a bit shadowy. We're not quite sure what they are. And the FCA, I think, has made this point, over things like cover holders and things. And so we use these terms to make things more opaque, really, not to make them more transparent. And I think transparency for the industry is going to be really, really important going forward if we're going to build kind of trusted brands and a trusted industry. So I think there are dangers in this as well as opportunities. So we think we've got to be, I think, looking at the MGA space, because it's growing, is really good. I can see all sorts of benefits to it, but you're right. We must kind of get straight what these things are, so that if we can't understand them, and not you and me, but if other people in the industry can't understand it, then we're a bit lost if we're trying to explain it to a customer.
Yeah, exactly. Yeah. Okay, good. Let's talk about Tesla, shall we? Because they put out an insurance product, didn't they? When you bought the car, you could buy their product. And of this article, it's all working really well.
Well, this is quite a sorry story, and it's perhaps a story that is educative about what you can and where experience matters and what you're trying to do. So this came out of a problem that Tesla had. Really, it wasn't like they were seizing an opportunity. It was because premiums for EVs were pretty high, and they said, well, therefore that will be a barrier to people buying a Tesla if they can't get the insurance. So Musk brought out their own insurance policies, which were actually quite cheap. So they're quoted at like $93 a month here for a Tesla Model S or something. Was quite reasonable. But then it all kind of goes wrong from there. So there's the example here, the main example in this Reuters special report, which goes into quite a lot of depth actually about how terrible the service is and all the complaints. But the main story is about a guy who gets the insurance, buys a Tesla Model S, and the car he engages autopilot. The car's automated driving system, and that then starts beeping, lurches to the left, crashes, hits the barrier in the middle, whatever they're called. They call it the median in the US, but there's
not the central reservation barrier.
That's it, central reservation. So there we are, two nations divided by a common language. It's median in the US and central reservation in the UK. Anyway, hit wherever one of those things are. The car flipped over, car filled with smokes. He escapes through the window with back injuries and all sorts. And he's a former Green Beret. As often in these stories, they seem to be, they seem to be people who've gone through some kind of special forces training. I don't know why that is. Probably makes the story better. Anyway, he said it was probably the second most traumatic thing I've gone through, other than being in combat. So cool story for a journalist to get. It's got all the angles, but actually that isn't really what the point is. The point is really about the insurance response to this. Now, this does, even if you take a bit of this with a pinch of salt as an article, it does sound terrible. I mean, he waited 7 months for the payment for the totaled car, so the write-off. And remember, Musk had offered this policy as vastly better service than any other insurer. So that's what they were selling it on, service. Same day collision repairs was offered. So he didn't. So he got 7 months to get that money. Then he had a separate claim for $50,000 in medical expenses. Now this had to go to the product liability function of Tesla, because clearly it is a product issue, not necessarily just an insurance issue. It has to be. It has to go through their product liability department. So it says he waited on hold for hours and hours, so hung up on 4 times, and then they promised him a call back. And 4 months later, even after being paid, he's still waiting for that to come through. So Tesla hasn't responded to any of this. Lots of other people are saying there's the same problem. So this looks like, perhaps it's not one of Elon Musk's most pressing issues at the moment, given he's perhaps got more with X and so on and so forth, and space rockets got 300 million exploding.
But that was a success.
He says that's a success. Yes, it's all relative, I guess, in the world of Elon Musk. And but I think for us here in our small world of insurance, it's about, this started with a problem, but it is tricky to provide the service, and also to, even for a new company with presumably no legacy or anything here, to just simply make a decision. Now, some of this is obviously to do with Tesla's reputation and probably the fear of agreeing liability claims on auto pilot accidents and everything. But even so, it just shows, actually there's something here that says to me it is quite tricky and challenging to provide good service in insurance, full stop. And why is my kind of question.
Yeah, that's interesting, because we ran a breakfast briefing yesterday, in fact, on this very topic, and I think we're going to explore it more. But I mean, one of the main kind of outcomes from that discussion is around the culture of the organization and being very risk averse. So any changes that they were trying to make to improve the customer experience hit kind of the legal and regulatory and compliance teams, and obviously they've got to be compliant. They've got, you don't want to fall foul of the regulator, but it was really stifling innovation, and people were interpreting rules coming out of the FCA in one way, and other people were going, well, that's just your interpretation. I don't see it that way. So I think there's a lot to go into, and I think we'll come back to it, Ben. And
and I mean, this is a more complex story even than that, because it's obviously backed by several insurers. Liberty Mutual was one of the originals. Markel's been involved. Others have been involved, but it doesn't seem like it's a happy story behind the scenes either. And this goes back to an earlier story we had about the cost of replacing EVs when they crash. It's really, really, really expensive. So you just wonder whether, in terms of the modelling and things that they've done around the claims for the insurers themselves, the capital providers, where they're involved, or whether that's really worked out as well, and whether this is part of the problem. Is they're saying, "My God, we didn't expect claims at this level, for each car, right?" So yeah, it's tricky. It's partly about the EV thing, but it's also about new insurers. Yeah, in a new world.
Yeah. Good. Okay, great stuff. Right, as I said at the top of the show, we have a guest this week, which, Ben, means that I can play this. We haven't heard this for a while.
Guest of the week.
Still as bad as it was when we used to use it.
Yeah, it's absolutely terrible. There we go. So welcome, Saki Thethy. He's head of data at Ascot. Before that, you were at Miller, so you've got this brilliant kind of broker and underwriter experience. So thanks ever so much for joining us today. We wanted to talk about kind of data and AI, and we had a meeting, a breakfast briefing earlier this week where we were talking about the practical applications of that. But perhaps we could start with and just focusing in on kind of the London market and your experience. How do you see kind of data and analytics kind of playing out in the London market? Where are the opportunities and risks, do you think?
Oh, firstly, thank you for having me. I wasn't expecting a jingle, but pleased I got one. Yeah, it's. I think it's been quite a journey. We've always, or certainly in my career, we've always been on the cusp of everything being data driven and being taken over. And this conversation seems to have been around a long time. And the way my sort of long-term framing of it is, if you think of brokers as sort of a vehicle for linking risk and capital, and underwriters as well as the same, there has always been a data lens to that. And I think we conflate data with technology quite often. But if you think of a submission of 30, 50, 100 years ago, it was ultimately data that an underwriter used, transmitted through a broker, that an underwriter used to make a pricing decision. So I think that my first lens is the London market has always been data driven. It's not as if a quote has been pulled out of thin air in the absence of technology. And I think that lens then helps to frame how we use and apply data in the London market. In a sense, we've always had modeling to an extent, and we've always had an operational model that is using data to make decisions. What's changed is how we use technology within that process. But I think that taking that sort of very, very macro lens gives me a thought process where I go, actually, it's not that we're completely transforming a model. It's not that data or analytics is a novel approach. And therefore, how do we operationalize it into what we're currently doing? And the lens I've had as joining Ascot, which is a very underwriter-led organization, is the underwriters underwrite. How do I understand that best and enable them to do their jobs better with the tooling that we have, as opposed to I think other organizations are at a different place or follow only, and that's a slightly different conversation.
Yeah, and that's something that we talk about a lot, and we'll agree with you on that technology and data is an enabler and not a kind of an endpoint. And I think we get frustrated sometimes by some of the narrative that technology is the answer when it's actually it's what you do with that technology and how you apply it to your business and how users use it. So it's really refreshing to hear that from someone in your position with that kind of control. That we talked on Tuesday about kind of the next step of data, or the next iteration, which is an analytics, which is the use of AI, and that's come about really over the last 12 months with ChatGPT, which I think was kind of born roughly a year ago, probably to the day, the minute as we speak. I just, do you feel that within your organizations, are you having conversations now that people are more accepting of perhaps how we can use it within our businesses?
Yes, I think so. I think that everyone's exec board is taking notice, and in a way they weren't of AI 18 months ago. I think that you certainly have a lot of companies that have AI policies that didn't, again, 18 months ago, that have been having exec level conversations around, well, what are we doing with this technology? What is this technology? And some of what you've got is not necessarily novel in terms of technical capabilities, but what is changing is it's sort of now in the public consciousness, and I think in the market consciousness in a way it wasn't 12 months ago. So I think that's the biggest shift. And to build on that, once you have something that socialized, people start to jump towards the use cases, right? It becomes applicable in a way it doesn't when it's in a sort of ivory tower or dungeon of technology.
So hi Saki, good to have you on. I had a question about that, because one of the things I think has been coming into my mind is that markets are driven by fear and greed, and I'm just wondering what your kind of view is, whether, because to me it seems AI has a bit of both of those, which is the greed of the potentially the large technology players who stand to make a lot of money out of it, and obviously we've had some Altman and all the shenanigans at OpenAI this week, which seem to be, in a sense, about that story of fear and greed. Part of the story is to say, well, what he was doing was pushing it too far, and that was scaring the bejesus out of the board at OpenAI, and also perhaps the the money side of it, whether that was over-promising or whatever. So I wondered whether, just when you take it back into the insurance industry, whether you feel we're in a moment of, whether we're thinking about this as just a nice bit of practical technology that really could help out at the basic level of the boring legwork that we all have to do in insurance, or is there something more than that? Is that narrative of fear and concern about, well, almost this, the trajectory of technology is, we're losing control, I suppose, which would be pretty serious in insurance, wouldn't it, if that happened?
Yeah, it's a great question. I think that one of the ways I sort of think about any novel technology is they all go through a pretty common hype cycle. And we were all talking about blockchain. I guess that was about 4 or 5 years back, and blockchain was the answer to all the London market's woes. And
yeah, I did say it was rubbish there on this show, though, didn't I? I said it was rubbish then. I'm not quite sure about AI, but but anyway, sorry.
No, it did. But I think that it was an interesting point, because there was so much hype, and there were a lot of people who at that point said, this is transformative. This will rip apart the operating models of insurance companies. And I think that every few years you go through the new thing. And so there's a few lenses, I'd say. The first is to ask myself, is this an industrial revolution, as some people claim, or is it faster horses? And I think that lens, right? Is this a potentially transformative tool that changes how the economics of industry or societies works? But when you look at how that's happened, that takes a long time to play out, because it's cultural acceptance, right? The period from the, it's funny, we're talking about technology, and I'm really taking it back to steam engines, right? But the period from the steam engine to when it was utilized in factories and actually caused a big societal shift is quite a period of adoption. The other thing I'd say is, with technologies, I think we're at this sort of peak of quite inflated expectations, and you go, it will fundamentally change the nature of the insurance company, and then you people start to apply these things in practice and go, actually, it can only do X, Y, and Z within a limited constraint, and maybe there's operational efficiency here, or maybe there is real world use cases that make sense, but they may just be a cost saving of X%, or they may just be a marginal increase to top line, but they're not fundamentally shifting the operating model. And I think those are the questions we have to ask ourselves.
And do you think, Saki, that conversation at the moment, I mean, obviously just from organisations you've been in, but and generally speaking, is one which, because the insurance industry's problem is cost, isn't it, really?
Yes.
I mean, fundamentally, it's just way too expensive. And we've got generally people who are overpaid for the sort of jobs. I mean, I don't mean the whole job that they do, but, quite a large proportion of the job, I mean, maybe it is for some of them, but for a large proportion of the job that they do is administration, and they're paid too much to do that. So that's clearly something that needs to be resolved, and therefore, de facto, you kind of go to technology as the solution for that. I mean, is that, so that's the kind of cost argument. Is there, and I guess that must play out very strongly within finance functions and boards and everything else. But is there a sense that you're getting that perhaps AI is saying that there's actually an opportunity, it creates also opportunity. So we're potentially going to create competitive edge through this, as opposed to just, the basics of saving money. Yeah,
I think that there is a consideration of that, but it is hard to realize. And I'll take, two sorts of lenses on that, right? So, as insurance companies, we hold huge amounts of data, and we make decisions on the way I think about it, on a portfolio basis and on an individual risk basis, a sliding scale in between the two. But if I were to look at the last 20 years of data and go, actually, I know that the market turned in response to these events. I know that pricing changed because capital came in or left. All well and good, and I could model that, but it would be very hard for me to predict market cycles without being able to predict, let's say, inflation or new capital entrants. And so I then look at that question and go, where are the levers that this can do on a portfolio basis, or on a more constrained portfolio, a treaty or a book of DA business. But I don't know that it's, you fundamentally can't use AI to predict whether someone's going to invest in an insurance company. That's sort of outside the boundaries. And I think that we're at times blind to, actually, let's work out very specific scenarios in which this tool has application. And I think the near term is very much operational efficiency, and you probably have, to your point, we're a cost heavy industry. That's probably where the savings are, because it's low hanging fruit relatively.
Yeah. But that doesn't necessarily address the growth issue, does it, or the profitability issue of the capital deployment through the industry, which is where it seems to be a problem. So I just wonder as well whether, because we have the cost issue, and then you've referred really well and articulated it really well around data, which is, my sense is from a lot of conversations is that the data isn't as good as all that. Once you get through, all the layers of stuff, actually the data doesn't work that well. CAT modeling doesn't work that well. You can kind of read that in the press every time it happens, So a lot of the fundamental tools that we do use around, the data itself is, for whatever reason, the underwriting process is a long way away from understanding what that risk is still, isn't it? So I wonder if that's still fundamentally a problem we have to solve in the industry before we get into, yes, we can save cost, yes, we can, but to grow. I mean, I was just reading articles this morning in the news, but about cyber, and that they put that into pool re, for example, going forward, that becomes, because it's such a huge risk and the industry can't really, runs away from it, so yeah. Anyway, so that's kind of my observations. I don't know whether there's a question there or.
I was waiting for it, but I think that it is. When we think about how new products, because I think this is a question about new products and novel opportunities for the market on that top line basis, and how they've historically come about, right? Is it we identify an opportunity or profitability out there, or do they quite often come from a conversation with a cedent or a client or a risk manager who, through a human understanding of their risk? And I think that we, as someone with a London market background, there is obviously volume business there, but there's also a conversation around what can we learn from consumer businesses? What can we learn from how motor and life is transacted in terms of how they approach segmentation? I think you also end up at times in an interesting place where you say, actually, maybe motor is priced almost perfectly because of the data they've got, and actually stuff it also commercially doesn't make sense, right? Trying insuring a Range Rover in the current context.
Yeah, I mean, you raised some great points, and it draws me to this this kind of markets behaving rationally or irrationally, and it feels to me that insurance always goes for the rational. There's insurance is this, and then there's this step, and we take this step, and then we model it, and we get the data, and everything works out okay, which is your predictive argument. But actually, when you look at the history, we haven't really predicted anything very well at all, and probably never will, which is fine. But I wonder what plays into those decisions, because yes, there's technology, yes, there's AI, but equally we know that the way that brokers and underwriters, for example, in their relationships interact, we can see in our data that creates often very good outcomes, because there's a kind of reciprocity that exists between them that is so far beyond what any technology could do, but actually it may just work to create a good outcome, because we simply asked whether the client was trustworthy and what was your experience of the business, and so it's that. I just kind of wonder, therefore, sometimes I think the rational narrative kind of takes over everything almost, and particularly from technologists themselves who get quite ranty about it sometimes, I think.
Yeah, it's a great
Not you, Saki, but other technologists.
but we've been here for how many years with we'll automate all the underwriters, or we'll replace the brokers with machines, and we haven't. And I think that there is a quantitative and a qualitative element to what the London market does, and we mustn't lose sight of that. Now, as technology develops, more of what is qualitative can become quantitative, right? But if you think about the trajectory that let's talk about cyber modeling has taken, right? It was almost here's a quantitative number that's come out of a model, but I've got 5 variations of that, and you had to have a qualitative thought process to make sense of that, that context. So I always think, as a former broker, I could go to 5 markets and I could get, and I know they would be modeling on a technical level in the same way, but then the price I would get might be different. Now, part of that's psychology, part of that's their cost of capital, other drivers they've got around their portfolio and their aggregation. But I think that it's for me a useful lens to think about, well, what is technology? Because if pricing is a model that is quantitative, but the quotes you get are different, so there's another piece in there, and not all of that other piece is quantitative too.
So we talked quite a bit about underwriting. Let's move it towards claims. There's a nice question here from Lewis. So how do we see AI changing the whole claims process going forward, and issues in AI generated images or false fakes? At the session that we ran on Tuesday, I think what was interesting, I think you had a lens through kind of an aggressive use and a defensive use, and then I think another person around the table was actually talking about kind of a vertical and horizontal use of AI, which is also quite interesting. So the vertical use would be to look at, let's say, the claims process in this question and work out where kind of the really small inefficiencies are, or where technology and data can help somebody do their job better, or take away the drudgery or whatever it was. So that's kind of a vertical way. And then you've got a horizontal way of looking at it. So things that are going to come on stream soon, like Microsoft Copilot, that will sit within 365, and everyone in the organization would have access to that. And no matter what you did, you'd have this assistant or whatever it was that could help you do, may be able to help you do your job more efficiently or better, or through a customer lens. So that's quite a nice way. I just wanted to, if you could perhaps expand on that, and with the, thinking about that in the claims context for Lewis there.
Yeah, so I think I'd start with a general point, which is changing any whole process is challenging, and experience shows that change happens best when it's iterative, it's small, and it's focused. But at the same time, it's like, a politician wants to build a shiny new bridge they can and put their name to, rather than some more prosaic interventions that aren't quite as headline grabbing. So I think that, if you think about how the claims process, and again, I take a very macro view on this, was done 30 years ago or even longer, right, with telex machines, and before that, right, you getting letters. New technology will inevitably change the claims process or any operational process, and I think AI is a part of that. I would be surprised with the rate of technological progress and the context in the market that claims processes don't look significantly different in a few years' time. But I think that people who go, actually, we'll get rid of all our claims handlers and we will automate the hell out of this and everything will be AI driven in 12 to 18 months, are probably not going to achieve all the benefits that they look for. So yeah, I think if you think about the premise of AI, it's you take or statistical analysis, as I sometimes cynically call it. You have a large data set, you draw inferences, correlation, causation, and you go, actually, that claim that we handle manually should be just paid out, and this claim that we actually thought was only going to end up here should be looked at by a human. And that's how I think the claims process changes, right? Our human interventions become more targeted. I think it was a two-parter, wasn't it? So there was another part about AI.
Yeah, issues with AI-generated images. I don't know what your take on it is, but I think, and we've talked a little bit about this, Ben, where they've now created AI to be able to spot AI. It's kind of a bizarre merry-go-round of no one knows what the hell's going on.
Well, presumably what you could do is, my dark side of my mind is working here. You create an AI image of a car accident, and you make out it's much worse than it actually is, so you get a bigger payout, which I can see would be a real issue and be quite hard to spot. Because it's exaggerated, I suppose. So I get that. Yeah, it's really, and it is very fraught, isn't it? Once you take people out of an industry where there's an incredible amount of trust is created in those interventions, those moments of truth that you've talked about, you could, maybe we don't change that. Maybe that becomes where the focus of the industry really is to say we need many, many more people who can make these judgments at the right moment in time, because that's the best way to do it. It may, in other words, become more dependent on the subjective discussion, judgment of a human being, as opposed to on technology. It's kind of back to my rational versus irrational thing. Are we going down a science route, or are we going down a human route?
Yeah, but there's always been, an arms race of fraud or people trying to get one over the system or the process, and there's always been adequate responses to that. And I think that you see that in hacking or in cyber as a class. So I think there's no doubt it will cause issues, but I think they're just in a certain way, a technological version of issues we've already had. And sometimes there'll be a technological answer and sometimes there'll be a human answer. But the business models adjust always to kind of cope with this. And there's almost I think there's an interesting point here that the moral hazard has been a constant. But there's sometimes a sort of social consensus or a sort of, it only ever becomes so big an issue, even if it is easy to do. And in certain, if you say in a volume book, I'm sure people model to an extent that there is an acceptable degree of leakage.
Yeah.
Interesting.
Yeah, and I think that's how you run it, isn't it? I mean, the credit card industry works off the same basis, and I happen to think its technology is much, much better, having experienced it, which is to say, we've just detected a fraud, that's it, it's being reimbursed on your card, and we're done here, right? And they've accepted what that level is, and they pursue it behind the scenes. And we talked about it on the show a bit, is that we kind of tend to take it almost as if it's an exception and a kind of assault on the industry, whereas actually there's no way. You're right, moral hazard will always be there, and you only really need to start to bring it out to the fore when there's something where it's growing for some reason and you're not in control of it, I suppose. Yeah, and I agree with that. I was very interested, just to go back, when you talk about small iterative change, and I would be right on the same page with you on that, and you were just talking about working with underwriting teams. I got the impression that you're kind of working with, well, this is kind of what they do, so less is more type of approach. In other words, we just kind of match technology as appropriate as we can move along with these teams. Is that kind of how it works?
Yeah, I think yes and no. So there is, my theory of how you apply technology to organizations is you meet the company where it is, and there's always that, oh no, we're all wearing t-shirts and we're sitting in Shoreditch and we're doing some transformative thing in a sort of cool startup space. And I think both have very good rationales and reasons. And Ascot is, to my mind, in some ways a 20-year-old startup, because we're very entrepreneurial. We've got underwriters that are exceedingly thoughtful about underwriting as a process, and I find that my interactions with them actually force a lot of my thought down certain directions. I'll get challenges from them. Could we be integrating this data? How could we be pricing certain classes, or how are we thinking about it? And I think that it actually, for me, is an incredibly fruitful conversation to engage with the organisation in that way. But I think there's space for both, and I think demand is uneven, right? Not every class and not every team has that push, and that's true across the piece. Yeah, and I was going to say, I think that's a really insightful comment, I think, and I think some of this is to do with competition, isn't it? I mean, you might. We talked about Elon Musk, and I was talking with some people yesterday saying that he's an incredibly driven character, and like a Steve Jobs, like others who said, well, we're going to take this whole thing by the scruff of the neck and we're going to find the biggest, most massive opportunity in the world. And they're kind of visionary leaders who you can see, have changed organizations and created amazing shifts in technology and everything else, and prosperity, if you like. So I guess you don't see so much of that in insurance, let's just say politely, but it is, maybe that is what we start to get in the future. I mean, now we were talking last week about how many organizations are now strategizing about the future, and my thesis is that we are in for a transformational period in insurance, primarily because it ain't got much choice, because it's not making much money and it's going around the same circles. So I think there'll be consolidation and everything else. So maybe we're in for a period. I don't know what you think of maybe we start to get some new players in. I mean, the Howdens, for example, talk a very big game about dynamism and change, and we're not waiting for even if a big litigation case comes
our way. We just walk on and keep on, and that's it. It's brave and it's ballsy, I suppose, is what you'd say about it. And that maybe we're going to get more and more of that, perhaps, and that would change the dynamic, wouldn't it?
Yeah, I think you are seeing almost in some ways a bifurcation of how fast people want to move and how they want to move. And I think that plays out, as you say, in the brokers. And I think it plays out the carriers as well. But, our Ascot's business model is very different from a Key or a Beasley Tracker syndicate, and but I think firstly I have to be cognizant of that, but I also go within that way of thinking or that mode. How are we innovating? Where are we pushing, and where are we not? But yes, it's a balance we all have to strike.
Cool. Great. Well, thank you ever so much for coming on and sharing those thoughts, Saki. I think we'll come back to you in a few months' time, and the technology's moved on, and we can perhaps have a look at some of those use cases. And you'll be at TinTech London Market as well with us again. So look forward to that. But for now, thanks very much for joining, and we'll see you soon. Thanks.
Great. Thank you for having me. Take care.
Right. That was great, Ben, wasn't it? It's,
good. Yeah, it's interesting. It's really interesting. It's got a great sort of pragmatic view, I think, of it, and that's what you need.
Yeah, definitely. Good. So we'll get Saki back on another time. Right, we're rapidly running out of time, but I thought I would. Do you want to hear a story, Ben, about what happened to me yesterday?
Go on, then.
You'll love the production values of this. It's brilliant, if I say so myself. So it's the train jacket story. So I was running, as I said, I was running a breakfast briefing yesterday morning. You sent me a link to a brilliant video that is the Jeff Bezos face boat. So anyone can just Google that and watch it. It's brilliant. And I was so absorbed in it that I just packed all my stuff up, got off the train at London Bridge, ready to go to Cannon Street. And as I got off the train, the doors closed. I thought, I've left my jacket on the train. Oh, and that was it. And this is me. Oh, this is real life footage, brilliant acting, just to punctuate the story. Yeah. Anyway, I'd left my jacket on the train. So I thought, right, it's 21 minutes past 7. So I thought, I've got time. Meeting starts at 8. It's 21 minutes. I can either chase my jacket, so get on the next train to Charing Cross, because that's the end of the line, or I just go to the meeting and probably wave goodbye to my jacket. So I thought, I'm going to go for it. So I used the Trainline app to say, what's the next train going from Waterloo East, which is the next station from London Bridge, to Charing Cross. And then it tells you what platform it's coming into. And there was 2 trains, so it's either platform 1 or platform 6. So I got on the next train. It takes 13 minutes to get there. And that's the route. Yeah, I know. I told you the graphics were good.
Really good for life.
Yeah. And so I was on the train, and this is what it looks like from above. So I was on the train going to Charing Cross. I get there, get off at the platform. Looked at platform 1. Well, that was the wrong type of train. That was a City Beam. I wasn't on a City Beam. I was on a normal train, so I knew it was platform 6. Up to the thing, over the bridge, down, bang. I was in the last carriage, so I went to the last carriage. Went to get my jacket, it had gone. I was like, oh, you've got to be kidding me. So I asked the cleaner woman and the fella as well. No, they hadn't seen a jacket. So I was like, oh, well, that's it. I've now 20 minutes to get to the Gherkin. I was miles away at Charing Cross rather than London Bridge. I was like, damn it. My plan had not worked. Walked out of the station. I just saw a little ticket office, and I thought I'll just ask in there to see if anyone's handed it in. And there he was, sitting on the side. The guard had got it. And that was it.
Amazing.
So I jumped in a cab. 20 minutes later, got there at 5 to 8, and all was well. Reunited. But the little train app thing, which I get frustrated with sometimes, was really good because it allowed me to find out the information that I needed in order to say, well, do I go straight to the meeting or do I chase the jacket?
Yeah, it's applying to science. It's good. It's very good
stuff, isn't it?
It must have been an expensive jacket to go to all that effort to get it back.
It wasn't really. I was just really annoyed. You know, you're really annoyed with yourself. Just leaving stuff in trains.
Yeah.
I was like, oh, damn.
You could just have taken it as an opportunity to buy a new jacket.
I could have done.
Yeah.
Yeah, but I don't think I'm too tight.
Well, that's what I was thinking.
Another story. Anyway, right, there we are. Story of a train and a jacket. That's what everyone tunes in for.
Very good.
Right, what are you doing this weekend, Ben?
No, not wife's birthday.
Oh,
it was an event, big event. Yes, it's a month. It lasts a month usually. The birthday.
Well, it's my birthday on Monday.
Yes.
And I've got so mine's a significant birthday, and so I'm going to have a kind of a pre-birthday weekend. I think we're going to go to Tunbridge and watch the light switch on, the Christmas light switch on.
Yeah, that's just what
on
you want
Sunday.
to do.
Yeah,
that'll be memorable.
It will. We haven't been for about 5 years, and it was so memorable last time. It's just hilarious. I mean, they have a bunch of floats, and you can the production values are similar to what you've just witnessed on here, and but it's brilliant in that kind of traditional. Only England could do it that poorly and be so good.
Yeah.
And I really hope they have a celebrity, a minor star. A bit like what have they got on with Farage at the moment? They haven't got Britney Spears. They got a sister.
Yeah.
It's like, what is that about?
Didn't know you had a sister.
Oh, did I? Oh dear. Anyway.
Yeah. Well, we'll celebrate, won't we, next week as well? So we'll report the celebrations of your birthday.
Yeah, let's take pictures and really embarrass me.
Yeah, that's exactly what I was thinking. Yeah.
Good. Excellent. Right. Thanks for tuning in, everyone. Hope you enjoyed it. And we shall see you next Friday, where I'll be a year older.
Yes. Have
Bye,
fun. Have a great weekend all. Bye.